Meanwhile, U.S. stocks got off to a weak start on the first day of trading in the fourth quarter, with all the main indices closing lower on Monday. Jill Maladrino, VOA Channels TV business correspondent in New York City, has the details.
Good evening, I'm Jill Malandrino from the NASDAQ market site in Times Square. Stocks closed the third quarter of 2016 pretty strong. Let's take a look at the charts right here. The S&P 500, we could see that major dip that we had right after the Brexit vote at the end of June and how stocks essentially took off through the middle of July, and we stayed in that 1% range, seeing a little bit of volatility as we kick off the fourth quarter of 2016. So we got these strong results on Fridays. The NASDAQ Composite led the way in the third quarter, gaining a full 9.7%. That's almost 10% of really strong activity for the third quarter of 2016. S&P 500 added 3.3%, and the Dow 2.1%, its strongest quarterly gain since the fourth quarter of 2015. Financials were very active last week as Wells Fargo posted another fresh low for the year, capping a 12.5% loss for the month amid its fake account scandal, while Deutsche Bank shares rallied off all-time lows Friday after a report that the bank may be able to negotiate a far lower settlement with the Justice Department over several mortgage securities cases. Now, the headline number was $14 billion a couple of weeks ago. It's reported, according to some sources, we might see $4 to $5 billion in the settlement. So it's way less than the headline number, just about 60% less. U.S. stocks opened the start to the week and the month and the quarter as investors continue to carefully watch the crisis surrounding Deutsche Bank and volatility in the banking sector. You could see we're down just about 0.5% on all of the three major averages in the U.S. The big question is with the German banking giant, are they too big to fail? Crude oil also helped lift markets last week in the U.S. and around the globe. Oil rose to its highest since August, above $50 a barrel in early trade on Monday. This is supported by a planned production cut by exporter club OPEC, although analysts caution the stubbornness of the existing supply overhang could temper a longer-lasting rally. So we're down just about 0.5% across the major averages. It could be because we had that big rally on Friday with the end of the quarter, which is also known as window dressing, where portfolio managers will sell their losers, buy the winners to window dress the performance of the funds. This is a last quiet week before quarterly earnings kicks into high gear, but the all-important employment situation report will be released on Friday. The employment data give the most comprehensive report of how many people are looking for jobs, how many have them, what they're getting paid, and how many hours they are working in the U.S. These numbers provide the best way to gauge the current state as well as the future direction of the economy. With policymakers on the Fed very dependent on data, this is going to help guide their rate decisions. The quality of the September report and revisions from August could also affect the timing of when we get that interest rate hike. There's only two more Federal Open Market Committee meetings in 2016, one in November, one in December, in which the Fed will deliver its decision to raise interest rates or keep them unchanged. Markets may also get some clues about the Fed's mood with 8 speakers scheduled throughout the week. From the NASDAQ market site in New York, I'm Jill Malandrino for Channels TV.
And here in Nigeria, let's cross over to the fixed income market for today's trading. Ayodeji Oyeniyi, fixed income dealer with Rand Merchant Bank, joins me now. Good afternoon, Ayodeji. Welcome back from your long weekend.
Good afternoon.
So what is the sentiment in the market after the independence celebration?
Okay, there is more on the buying side for today. It's an anticipation of the liquidity injection that we're expecting for Thursday. So we have about 160.7 billion maturing in Omo Bill on Thursday. And so we see people taking position ahead of that. So on the day, in the Treasury bill space, we have rates dropped marginally by about 15 to 20 basis points. And in the bond space as well, we've seen yields drop on the day by 5 basis points. So we've just seen more on the buying sentiment across the curve.
Now, how would you compare the opening yield and the yield you have currently?
The current level is just, we've been hovering around this level for the past 2-3 weeks now. The reason why it's more or less like being stuck at this level is because we have a CBN. So whenever we have a Omo Bill maturing, the CBN comes to mop up that liquidity. So it's just so we've just been moving around the 10 to 20 basis point level. About the same level. So it's relatively flat.
Now, a Treasury bill auction, of course, is expected, scheduled for tomorrow. In terms of liquidity, what are your expectations?
Okay, in terms of,